So much. For more, let's bring in National Taxpayers Union Government Affairs Senior Director Tommy Aiello. Tommy, if I messed up your title, forgive me. Welcome.
Thank you for having me.
So the former St. Louis Fed chairman talked about a rate cut this week. Let's play his prediction. I'll get yours in a second.
I think the data is supportive of a cut in rates. I think what the committee is going to do is go 25 basis points at this meeting, but they'll also put out a dot plot, the famous dot plot, and that will show their intentions for the next meeting and then the December meeting after that, and even into 2026.
What are your expectations for Fed action this week?
I think exactly right. 25% basis cut is probably what's priced in. The markets are expecting that. It's very possible we can get a 50 basis point cut, though I don't think markets really want to see that. And they might not want to see it because it would signal from the Fed's perspective that there's weakness, much more weakness in the job market than was originally anticipated. So it could really cut both ways. But I think a 25% basis cut is on the table.
Bullard seemed to agree with President Trump that maybe this should have already happened. Have they been slow to take action?
It appears that they've been a bit slow, but they have to look at the full puzzle. They thought the job market was much stronger than it was. It actually isn't. The inflation numbers were a bit high. It seemed like they're in a bit of alignment now, but it's still above the 2% inflation target that the Fed wants to see at 3%. So I think that's why they're going to be a little bit cautious going into this first cut of 25 basis points, but we could see more cuts as we close out the year.
The deficit fell in August to $345 billion. The national debt's at $37 trillion and counting. What are your concerns on deficit and debt?
Yeah, I think that's exactly what the Fed is looking at. The more money that we have to borrow, it means inflation is going to continue to stay high. So if we really want to get inflation lower, it has to do a little bit with tariffs and the job market, but it has to do with spending. If we cut spending, get it in line, I'm really confident we'll see inflation fall as well. So we'll have to see what the government spending picture looks like as we go into the end of the fiscal year. But it's a lot of money, $2 trillion in our deficit just this year.
Prices are up on some items. Bananas, 6.6%. Coffee, nearly 21%. College textbooks, 12%. Will that stabilize, in your view, with more concrete trade deals?
I think so, and I think that's what the data is telling us as well. But when you talk to businesses and when you look at the data, there's a lot of uncertainty that they have to deal with. And, you raised coffee, for example. The United States, we don't really grow coffee. We import 99% of it. So when Americans, they go to the coffee store or they go to the grocery store to get their coffee for their morning cup, they're going to be paying 20% more. It's a lot. So I really think we need to get our trade agenda in order. Yes, we can and we should manufacture more in America, but there's some products that are being tariffed that we simply just can't produce.
10 seconds. Heading into a new week, are you bullish?
I am a bit bullish. I do think the market's pricing it in a rate cut. I think we'll see it, so we'll have to see.
Tommy Aiello, thank you very much.
Thank you.